Hello everyone, and once again welcome back to another video. You may all be aware of what has been happening all over the world over the past couple of days. Mostly, unfortunately, negative news have been taking place. I'd like to cite the coronavirus as the main focus of the last couple of days course of events, which unfortunately is causing plenty of issues. It's disrupting entire countries, but most of all, it's causing deaths and loss of life, which is really sad to think about. Whenever something like that, so unpredictable and so instant, could then take away everything that all of the certainty and safety that you've had until the day before. So I'd like not to focus too much on that to bring further negativity to this video. The point I'm trying to make, however, is that there has been a lot of volatility caused by all of these events, caused by all of these news. So talks about Brexit and talks about the interest rate. And I'd like to perhaps focus on how these then end up affecting or not the structure of our patterns, because we're still sticking to the chart analysis and bringing fundamental factors this time onto them. So Brexit is obviously going to happen tomorrow. The 31st of January 2020 will sign a very important event in the history of the world, but more specifically of Europe and the United Kingdom. But today, the most recent piece of news has been relating to the interest rate. So the Bank of England has decided to hold the interest rate as 0.75 amid early signs of a pickup in the UK and global economies. So the circumstance here was that due to the fact that the GDP of the UK was slowing down, then the central bank, such as the Bank of England, tried to enhance the borrowing and lending of money by potentially lowering the interest rate by a quarter of a percentile. So from 0.75, it would go down to 0.5. However, this didn't take place because of the fact that today in the news we could learn that after Boris Johnson was elected, then signs of positive action and positive development within the economy of the United Kingdom have been taking place, and as a result, today the Bank of England has decided to keep interest rates as 0.75. As you can imagine then, this sort of events can then lead to a huge number of orders, which in turn create huge spikes and increased amounts of volatility. But today's video is then trying to address whether what we see right here in this box I'm about to draw, is it really caused by the news that we saw today, or is there a more truthful, a deeper, a more underlying reason that is behind this and dictates what price actually does? Let's take a look. So the euro pound is showing impulse, correction, impulse. But what is this? Isn't this just like what I've been saying since day one? That's how price behaves due to its nature. Okay, so it comes as no surprise that we were anticipating this because of the fact that first touch, second touch, third touch to the downside, we were not anticipating any other type of scenario regardless of the outcome of that news. So we shouldn't just sort of be fearful and be hesitant whenever something like that on the Forex economic calendar takes place, high, 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 because of the fact that all news do is they create the volatility. They do not dictate the direction. So, for example, instead of this massive sell-off in just a couple of hours, in a normal type sort of scenario and condition, we could have had this, just a bit of a corrective nature, but we would have still reached the 90% rule, as I've mentioned previously. So all it does, again, is create volatility, does not dictate the market structure. Because what does dictate market structure is the patterns, is the overall nature of the market. So impulse, correction, impulse. If this sounds a bit strange to you, such as the euro pound, well, let's take a look at the GBP CAD. So pound CAD, daily structure, very clear, so bouncing from these levels down to that level. What is the 1 hour showing? Very, very similar circumstance. That's just to separate. Impulse, correction, and guess what? Impulse. Isn't this exactly what we were anticipating? And then again, let's take a look at GBP USD. Very important pair, one of the most influential ones. Daily structure, descending nature, impulse, correction, impulse, met this descending trend line, so naturally the pattern reversed. Let's take a look at the 1 hour. Impulse, correction, impulse. Then what happened? Price got sort of caught in this area here, and therefore it retraced to the downside, creating this double bottom. But the double bottom took place at 7 o'clock, as you can see down below here, at 7 o'clock this morning. So what do we know about the nature of a double bottom? Or a double top in this case, in this example. Okay, so double top. We are expecting after the second touch, a move to the downside. Okay, this is very similar, just in an opposite. Well, actually, let me do this. So by flipping the chart, you can actually see what I was talking about. Impulse, retracement, impulse down. But isn't this what we were expecting, regardless of the outcome of the news? That's exactly the point I'm trying to convey, is news just creates volatility. So, like I've said before, in a normal type scenario, we could have had this. So instead of, so from 10 to 3 o'clock, so about 5 hours, we could have taken maybe a day and a half, a couple of days to reach it. But the structure always stays the same, and it doesn't get violated just because of a simple news in the market, because these, once again, they take place regularly. So interest rates will then be reassessed every 6 weeks, every 10 weeks. So we can't then sort of stay out of the market every so often just because we are fearful of the unexpected, of an outcome that we hadn't anticipated. So big lesson here: stick to the chart patterns, stick to the analysis. Remember that price always moves like this in case of a downtrend, or like that in case of an uptrend. And whenever you see a forex economic calendar looking very red, yeah, something like that, don't worry too much about the low and the medium. It's the red that really drives volatility and orders. Then we can anticipate no more than what we had studied and previously forecasted. Downside, because of the fact that impulse, correction, impulse. Upside, impulse, correction, impulse. And you may be wondering, well, if it's always relating to the pound, how come is it that in one instance it's going up and the other instance it's going down? Well, that's simply explained by the fact that if you take a look at euro pound, well, the pound is the second pair, whereas in here, pound CAD, pound is the first pair. Therefore, whenever pound CAD goes up, anything, so indicating strength within the pound, anything that is trading against the pound will go down. Okay, such as the euro pound in this case. Okay, so very quick video to provide you with a brief explanation as to what we should really focus on. So never mind news, never mind speeches by bankers and central institutions. Focus on your research in terms of detecting price structure and price action. And again, do not be fearful just because of a piece of news, and stick to the overall trading plan. Thank you very much for watching, and until the next one, cheers.